Um, Welcome everybody for today's session on equity research essentials. My name is Raza Jafri. I am a director at the CFA Society Pakistan. I also am the head of equities at Intermarket Securities, which is a brokerage firm. And I've been an analyst for more than a decade now, about 15 years. The idea for this session, of course, this is part of the series on the CFA Research Challenge, and I understand you've already had, obviously I did the kickoff, and I understand you've already had the session on financial model by Saad Ali, and he's an ex-colleague of mine. So I think I did watch the video. I couldn't attend it live. I did watch the video in follow-up. It was excellent. I hope you would have learned from it. I think he's probably one of the best heads of research around in Pakistan right now. So I'm sure it was valuable. The idea for this one is to, obviously, since you've made the model, I'm assuming, and where the best part of November is over. So, I'm going to guess that you're well on your way to developing your financial model, and you might have started to write your report, or you will soon be starting to write your report. And so the idea for this session is to obviously introduce you to a little bit about, the importance of the equity research report. And then, I've tried to tailor the presentation in such a way that, it takes you through each of the sections on which you will be scored and graded, and we'll see, what works and maybe what doesn't work and what has room for improvement, looking at previous entries that we've received for in this competition. Right, some housekeeping rules. The session is for 1 hour, including Q&A. I understand we've had a 5-minute, the start is 5 minutes delayed, but I will try to fit it in within the time. If it's going over a little bit, I don't mind. You can read the housekeeping rules. You will all be muted for the session. We already had the group photographs. That's fine. We might have one at the end. I'm not sure. We'll prompt you. Q&A will be held at the end of the session, and if you have any questions, just put them through in the chat box, and I'll take them from there. Right. So this is again part of the series on the CFA Research Challenge, brought to you by CFA Institute and CFA Society Pakistan. Before I get into, and I gave you a bit of an introduction, I want to introduce you to what an equity research report is. You need to understand a little bit of the the industry. Right. So if I really simplify it, capital markets, and then obviously equity markets in general. Equity markets, we're talking the stock market, has two types of main participants, right? I mean, there are obviously the regulators, all other stakeholders as well, but there are two main stakeholders. One would be the buy side, and one would be the sell side. So the buy side is institutions that invest on behalf of their clients or their investors, right? So mutual funds, life insurance companies, pension funds are all examples of buy side entities. And some of the global examples are BlackRock, Berkshire Hathaway, Fidelity, Franklin Templeton. You might have heard of them. So these guys manage assets on behalf of their clients, and they will invest them in different assets. In our case, the stock market. And they're facilitated by the sell side. So if you're a stock broker, you are known as the sell side, and the sell side's job is to obviously advise the buy side, give them, enable them to execute their trades, but also generate investment ideas for them. And how do they do that? They will be doing it. One of the ways to do that is to issue research reports, because the sell side will then hire analysts who will then cover sectors and companies and issue research reports and recommendations to the buy side. Now, of course, buy side, has their own analysts as well, but their scope of coverage tends to be fairly wide. On the sell side, it's easier to become an industry expert. And so examples of brokerage houses and investment banks globally include JP Morgan, UBS out of Switzerland, Goldman Sachs, etc. So that's the idea. In our case, we will be focusing on the equity research report that is prepared by sell-side firms, by brokerage firms or investment banks. Right. So that's the equity research report that we will be focusing on. I sort of tried to introduce you a little bit about this competition, the importance of this competition, what it leads you into at the kickoff at the meeting and the company meeting with Maple Leaf Cement. But I think it's important to go over this again. So basically, the research analyst who is going to be preparing the equity research report. What do they need, right? I mean, obviously, if you want to work in this industry, you will need to know financial modeling. I already mentioned that you've had that session with Saad on financial modeling. You will need to know report writing. You will need to have effective communication skills, and you will need to have the ability to work independently and as part of a team. And you're an analyst, when he or she starts to work, you're assigned a specific sector. So it could be banks, could be oil, fertilizer, cement. In this case, you guys are going to get hands-on training with how to become a cement analyst, right? So you're doing a report on Maple Leaf Cement. So hopefully this exercise is going to encourage some of you to consider a career in this industry. It is a rewarding career, as you can see. I'm not going to go over these each of the aspects, but I'm sure you've had the time to quickly see them, and this presentation will be shared so you can see what the pay scales are, what the benefits are, the perks, maybe the hours, what sort of work you're expected to put in. Right, so very quickly, this is I'm not going to focus too much on this. You can read the bullet points yourself. This is typically what a day of a research analyst might look like. You have to come into the office early, of course, before the stock market opens. You will have to go through the news, be updated with all the events, maybe not just that have taken place in Pakistan, but globally as well in other markets while Pakistan was closed. And then, of course, the day you'll have to work on your report, and the reason I've made it bold is that is a core part of your output, because you will be you will be talking to maybe your companies, you will be talking to a lot of people, you will be compiling a lot of data, you'll be conducting research, and you'll be compiling all of that into an equity research. And remember that, for a brokerage firm, there is no product as such, right? We're working in the service industry, so we're not manufacturing anything. The report is the product, and that is actually going to be used by the sales team to generate trades, right? So it's a super important document in the sell side and indeed in the wider equity market. Right. So let's get into the crux of the presentation for today. And so, like I said, what is that equity research report? And there's no harm in me repeating it. This is the product of the research team or the brokerage firm that is employing the research analyst. And it's a way for the analyst to communicate his or her findings to the investor community. So you might have researched on a stock. You might have come upon a winning stock. You might have said, oh, this is fantastic, I've done a lot of research, this is a screaming buy, I need to tell clients. And so the most effective and efficient way to reach out to your clients would be to issue an equity research report, because you simply cannot pick up the phone and start calling everybody. You need to first have your thoughts penned down in a coherent manner. You will obviously, when the report goes out, and obviously, if you do pursue the CFA, the designation, and you sit for the exams, you will know the ethics is a big part of it. So you can't just start, it has to go to all of your clients at the same time. So the best way to do it is to obviously put it out through email. And then, of course, then you might want to start off with calling your clients, and it's understandable if you want to call your largest clients first. But this is the most efficient way to reach your audience. And remember, this report is the output. So a lot of work has been done by the analyst before the report is written. The report is the final output. And there's no correct way to write it, in general. We will, of course, talk about what a winning report looks like in the context of the competition that you're in. But there is no single correct way to write an equity research report. If you start working for brokerage firms and investments, then you you will probably follow that firm's format, which has already been devised for you. So on your screen, you can see snapshots of two real life reports. They're fairly old, so I thought I'd use them. They're about 15 years old when I started working. So I remembered these, and you can see both of them are on MCB Bank, which is a listed bank in Pakistan. And you can see the different kinds of formats, right? So the one on the left is by Morgan Stanley, and the one on the right is by Merrill Lynch, which is now Bank of America Merrill Lynch. And the report can be on a market or a sector or a company. It can be detailed or it can be short. In your case, you're doing sort of like a bit-sized, sort of like an initiation. That's what you're doing. Initiations tend to be longer, but in your case, it's, I believe, 10 pages and then another 10 for the appendix. So you're doing it on a company. But of course, you will need to have that sector knowledge, as we will discuss later in the presentation. General tips. Some of these are fairly intuitive, and I've mentioned there's no single correct way to write an equity research report, but there are certain sort of golden rules you can follow. So use a reader-friendly font. Make good use of graphs. Try to give your readers' eyes a bit of rest. So don't make it so texty that it's just text, right? It's not that kind of report. Remember, this is the product of a brokerage firm. It's marketing material essentially. So you will be using this report and going out to meet clients or picking up the phone and saying, look, have you seen my report? Can I tell you about it? So it has to be presentable, right? This is marketing material. If you think about it. So make it reader friendly, make good use of graphs, use interesting headings. You want to pull the reader in, right? You don't want to make the report boring. This is not a university thesis. This is something it's going to be eye-catching. You want to put your point across forcefully, and so little things like these matter, right? Proper punctuation, good use of fonts, good grammar. They're all very, very useful, especially in the professional world. You don't want to put your reader off. So the second point is use formal grammar, and I'll give you an example. Use has not instead of hasn't. Right, so hasn't is fairly informal. So don't use that. Use has not instead of hasn't. Do not, of course, use slang. I don't think the readers would appreciate that. Think before writing, of course. So you don't want to just jump into it. It needs to be thought out before. And everything needs to be working towards making the report very persuasive, because you're telling the investor of what to do, whether to buy the stock or sell the stock or hold the stock. So it needs to be persuasive. So put some thought into it before you start writing. Typically speaking, the first page is the most important. Okay, so your readers are usually going to be very busy people. Think in terms of your clients, right? These are big fund managers or buy-side heads of research. They're on everybody's mailing list. I mentioned that the best way to get your report out is to send out an email. So if they're getting emails from a lot of brokerage firms, imagine how quickly their mailbox will be filling up every day. And so you want, I'll go back to the first point. You want to make good use of headings, for instance. So you want to catch the reader's eye in that cluttered inbox, so that he or she actually goes out and clicks on your on your report. And so, like I said, they're very busy. So your first page has to be very important. It's often they're just going to scan the first page very quickly. And if they like what they see, if they're like, yeah, okay, this is something that interests me, they're going to, go through the rest of the report. So you might have made a lot of effort on your report, you might have excellent recommendations, but if your first page isn't really pulling the reader in, then there's a chance that they're not going to go through the report. So put your conclusion up in front, right? Whatever you're trying to say it right up front very clearly. I want you to buy the stock because of this. These are the reasons. Here's the upside. Here are the multiples. Ideally, right? So condense your argument into a few key points. I tend to find that 3 points works. Of course, there might be more than 3 critical points, but at least put 3 of them right up top. Look, I want you to do this: buy this stock or sell this stock, and here are the 3 reasons that I'm giving you. And so the reasons need to be backed by proof, but that can come later. The details of that can come later on in the report. But but just be very upfront about what you're recommending. Don't put this behind and try to put it right up front. As you go along in your report, you need to back up your assertions with proof. So you can't throw out statements flippantly and expect the reader to agree. So what if you're saying that this company's sales will grow? So you need to say, you need to be specific, grow by how much and in what period of time, and then you need to say why. So you need to give a reason why you think that the projections will be what you are saying. So you can't escape numbers. It is an equity research report after all. So back up your assertions or your statements with proof. Don't throw out statements without any proof, because then there's no point. Focus on the key drivers of that company, and I think you're well on your way to pinpointing what you need to be showing to the reader. Again, when we think of report, I think, and you are students, you might think that this is going to be something that's going to rely talk about the past more. It's not. This is actually the reason is to actually give projections. So don't ignore the past. You can use it to understand the company, and you say, okay, this was the past trend. But the idea of this report is to give a talk about the company's future, because when you're doing your DCF calculation, when you're valuing the company, you're actually discounting the future value of this company's cash flows. So you want to be focusing more on the future, what you think is going to happen, and that's an essential of investing in the stock market. The stock market has already absorbed the information that is available to it right now. So everything that has happened in the past is already part of the share price. How the share price is going to behave in the future is how the future will is going to be determined by how the future will pan out. Be independent and objective. You're not representing the company. You are, you're trying to give the best available piece of advice or recommendation to your client. So your duty, your fiduciary duty, is to your client, and they need to be getting the best advice from this. So you don't have to agree with everything the company says, right? So I mean, chances are most companies will try to present their case in a positive way, but you need to assess if they're talking the right thing, if they're making sense, or maybe some of their assumptions are too bullish or too bearish. You need to be the judge of that. And then towards the end of the report, when you're closing it off, obviously just go through it and say, look, why did I put this here? Is it actually useful to my reader? Is it working towards that overall argument? So all of the things that you put into your report, into your 10 pages that you have for this competition, they need to be supporting your overall argument and not detracting from it. So this can help you while you're going through your report. Once you're done, that okay, why did I put this here? Can I substitute it with something else that might be more useful? And so you can do this sort of check when you're done. So these are just some general tips while you go along doing your report. And the rest of the presentation is going to focus on these 7 or 8 sort of sections on which you will be graded. And I have been a grader in the past for this challenge. I have been a grader at the regional level as well. So the idea is for you to understand what the graders think, what you need to be putting in each of these sections, what at least in my view, what works and what doesn't work. And that will maximize your chances of improving your score, because obviously it's going to be a tough competition. There are many teams, and obviously only the top 5 are going to progress to the presentation round. So it's competition is going to be very tough. So you need to put your best foot forward when it comes to writing the equity research report. Right. So the first thing I want to talk about is the general sort of look and feel. And I mentioned this at the start that reader friendliness is important. In terms of what font you're using, the font size, the quality of the formatting, right? The colors that you're using. These things are all important. And remember, like when a grader will be grading your report, typically they get about a week, 10 days. And they will get about, we'll try to split how, typically we do it in rounds, but, at least one grader will be doing, a good number of reports, right? So they will be comparing, right? That's how you're going to give that score. And so this is the first impression will go a long way, right? So there are no marks on this. There are no marks to general look and feel, right? There wasn't any, as you can see, there's no marks for any of this, but it's the first impression you see that will, I think, go a long way. And so these are actual reports that we have received in prior years. They're both on the Pakistan Stock Exchange. And you can see, so this is just the half. I've just taken the first half of the first page, okay, just to show you a good example and maybe shown you an example that doesn't work. So the one on the left, you can see that they've put thought and effort into, putting out something that you want to read, right? You want to read this one. And then the one on the right, it's just, I feel I mean, look, it's not that good, right, compared to the one on the left. So it doesn't draw you in, and it doesn't give you that good first impression. So be cognizant of this. So the format that you've chosen, that's going to go through the rest of the report. And I can look at the left one, I can see, look, I think there's logic to this, there's coherence to this, they're using graphs. The one on the right, there are no headings, I don't know what's happening, I need to search for what's happening. There are no graphs, it's not easy to read, right? It's painful. So bear that in mind. The general look and feel has to be good. Secondly, the investment summary. What I suggest doing is, putting maybe the main points of that investment summary. And the investment summary is basically telling, is your main points why you should buy or sell or hold Maple Leaf Cement. And so I suggest the investment summary, use that on your first page. I mean, that's probably maybe something that you want to use on the first page. And also maybe if you have space in the rest of the report, maybe repeat it again, maybe with a little bit more details. So first up, you could put like maybe two liners on the main points that you feel this is why I should the reader should buy some Maple Leaf Cement or sell. And then later on in the report you can expand it a little bit, right? And you can add points maybe if there are more than 3 or 4. And you can give details in maybe on the second or third or fourth page, wherever you want to. Typically I think you want to start with that first page, then you want to have that company description, and then maybe repeat your investment summary. But there's no, like I said, one important thing, you can change the order of this, right? So it could be that somebody wants to put the risks right at the end. Typically reports have risks right at the end, so ESG could come before that. Figure out what works for you. So there's no, you don't have to follow this this section by section. You can change them around. And I suggest investment summary first page, and then you can follow it up with it somewhere on the within your report. And so these are the 2 examples that I've chosen for investment summary. So on the left, you can see that they're clear about it. So they're saying that I want you to buy a share of the Pakistan Stock Exchange because digitalization in Pakistan is going to increase. The economy is going to do better, which will push trading activity. The exchange will introduce new products. The one on the right with green, there's nothing wrong with it, okay? But it could be improved upon. So the one on, see, remember what I said in the report, everything that you put in the report is going to say, I want you to do this. So in this case, both of these reports are advocating a buy, but the one on the left is being more persuasive. So the one on the left is saying the economic turnaround will push volume growth. So now I want to read that paragraph now. The one on the right is just saying stable GDP. What does that mean? So there's a connection that's missing between what they're trying to say here, right? They're trying to say that the economy will be stable, the growth will be okay, that will be good for the, but that's an assumption that I'm trying to get at, right? Given my experience, if you're familiar, I mean, you would say that, okay, this is what they're trying to say, but don't make the reader assume things. You need to feed everything to the reader. Don't assume that they know much about this company or the investment case. So everything needs to be building towards your recommendation. And so your recommendation is summarized in the investment summary. And you can do it in a good way, or you can do it in a bland way. And you do it in a good way, and you're well on your way to sort of hooking the reader in and getting a good score for your report. Right. This is business description, and now this section is just 5 marks. But if the competition is tough, then these marks can also make a big difference. And in this section, you're basically introducing your company, to the reader. Do not assume that the reader knows anything about the company. Okay, so obviously use them. You have to put in basic information. But be selective, right? What information do you want to tell them? Right. So the one on the left is this is both on national foods, both of these. The one on the left has actually, talked a little bit about the history, their recent expansion abroad, and they've mentioned that they're in these segments and actually, talked about these segments in detail. I would probably argue that this is a slightly cluttered. You don't need to, maybe fulfill all of that space on the left hand side. I think it looks a little bit cluttered, but I can understand because you guys will just get 10 pages in the report. So you want to put as much information as possible. But on the one on the left, I would probably say, look, they've done table 1 dominant categories, and then in the second one they've just done the market share in the dominant category. So you don't need to put the dominant categories, you've repeated it. So they've repeated recipe mixes in the second table, and then in the bottom 2 tables. So it's a bit cluttered for me, but in general this is good because they've touched upon all the right things. I get a feel of the company. The one on the right, I think the text itself is fine. Like I said, there's nothing wrong with it, but it's maybe I would have liked to see more. So remember what I said at the start. You guys are going to be graded. So imagine a grader is maybe grading both of these reports, and he's got them lined up side by side, and he sees the effort that's gone in on the left one, and he sees the effort that's gone in on the right one. And I know it's just 5 marks, but the one on the left could get a 4 or a 5 out of 5, and the one on the right might just end up with a 2 or a 3. And so it's going to make a difference when you come to tallying the report. So this is what I had to say for business description. Secondly, this is important as well, the industry overview and competitive positioning. This will probably follow, you'll probably want to place this close to the business description because you've talked about the company. So you want to be talking about the industry that it operates in and its competitive positioning within that industry. So this is a section where you want to demonstrate how well you understand the company and the space in which it operates. I have seen people use Porter's 5 forces and SWOT in this. You can, if you want to put it in the middle of your report, that's fine. Sometimes it works. But maybe you might want to consider using them, but maybe making them part of the appendix. And maybe let your report be a lot more free flowing instead of just robotically using Porter's and SWOT in the middle of your report. You might want to put it in as an appendix, but that's just my view. It's not wrong if you want to put it in as part of your main report. But try to understand this industry, right, and try to understand the company's position within it. I as a grader, I want to see how well you've understood what this company is. So you want to understand the industry. Is it a high growth industry? Is it a sunset industry? Is it i.e. is it a mature industry? Is it is it open to disruption? Maybe if you want, you can give a global perspective also. That helps, again, in a very competitive environment. That shows you've gone the extra mile. But I want to want you guys to really understand the company. So is the company a size leader? Is it a cost leader? Maybe it's got a great brand compared to peers. So that needs to come out of this section, and that helps me. I imagine you're going to present this and give it to local graders who know about the industry, but hopefully when you win and you go to the regional round, they're not going to know about Pakistan Cements or Maple Leaf, but they will know what a size leader means. They will know what a cost leader means. They will know what brands are. They will know what a sunset industry is. So these are some things that you want to classify your industry and your company in, and so that gives your it makes it easier for the reader to sort of connect with your reasoning. So again, I have taken examples from last year where Pakistan Stock Exchange was a subject company, and on the left you can say that they've pinpointed that it's a monopoly. It's the only stock exchange in Pakistan. They've pinpointed that it competes with other asset classes. So an individual can invest in equities, or it can go into bank deposits, or buy gold, or buy property. So they've got that understanding. The one on the right, and this was the whole page was just a comparison with Pakistan with the other exchanges globally. And so they didn't compare Pakistan with the exchange with other asset classes that an investor has that choice, right? They didn't go into that. And then I mean, you get 10 pages only, and the whole page was filled with Kazakhstan, Colombo. I don't want to read half a page or one page of other exchanges, right? I mean, I understand that you could maybe summarize this in a small table, right? You don't need to write a whole page on something that has nothing to do. You're covering the Pakistan Stock Exchange. You're not covering the Kazakh Stock Exchange or the Colombo Stock Exchange, right? So so the team got distracted. I mean, I would have compared it to them, but maybe in the form of a table, and done a lot other stuff that the team on the left seems to have done. So you can see, maybe so as long as you understand what you want to put in this section, I think it will be, you'll be on the right sort of track. I find this section, financial analysis, this tends to be tricky for most teams. It's a tough section to master. It has 20 marks. It has 20 marks for a reason. And I think this is basically, when I mentioned your investment summary, your recommendation, and I mentioned at the start that it needs to have proof. This is where you put that proof. This is the numbers behind whatever your recommendation is. But the numbers are also telling a story. So you need to obviously communicate that story to the reader. And this is essentially, you'll be relying on your financial model, your projections, your output for this. So you'll be saying that, sales will be growing by this much over the next 5 years. And the, main drivers for this will be this much. So you need to explain what's happening. But again, all of these, typically are going to, be reasons that are going to be supporting your overall buy or sell call. So on the left, you can see that it's a buy call. So they're saying positive trend in local sales. And then they'll be talking about how much sales are expected to grow by and what will drive those sales projections. Then they're saying the increase in export and export sales. And so again, how much it will increase by and why. And then margins. So some of the things you want to look at are, could be volumes, how much cement is being sold, pricing, the COGS and the margins. If they're expanding, then maybe CapEx. If they are expanding, maybe they'll have high financial charges, how the cash flows are going, how the capital structure is going to look like, the profitability and the ROE, of course. And so the idea in this is, you don't have to do it on every single ratio that you can think of, but pick and choose the most important of these ratios that seem to be supporting your thesis more forcefully. So some of these might be more forceful, or some of these might be points that are working better for your thesis. So pick, don't have to do all of these. You can just pick and choose the most important ones of these and write on them. But this is a tricky section, right? And it's a tricky section to grade as well. It's a tricky section to write on. The one on the right, again, maybe look, there's no graphs. I don't know what's happening. There are no subheadings. I don't know what's actually happening, right? So they've talked about net profit margin and asset utilization and capacity, but I have to search for it. And the one on the left, at least makes it easier for me to say, okay, look, here is where they've talked about different things. And again, look, there's no right or wrong way to this, but I'll repeat, pick out the most important points and give proof. Please don't just throw out statements. These need to be backed by numbers. Valuation, again, 20 marks like the previous section, but compared to the previous section, I think this is fairly easy to get right. So put yourself in the mind of the grader. I will want to see how many valuation techniques you've used, what is the rationale that you have used to arrive at those valuation techniques. If you have used DCF, then is it FCFF, FCFE, or both? why. I will want to know the inputs that you are using. I will want to see how you've arrived at your risk-free rate. What is your terminal growth rate, and why have you decided upon that terminal growth rate? If you're doing, relative valuation, I will want to see the multiples for the peer companies. I would want to see your multiples for Maple Leaf for the last 5 or 10 years. What kind of peer multiples are you using? Price to earning, are you using price to book, price to sales, maybe industry specific multiples like EV per ton. I might want to know what the cement industry multiples are looking like in comparable markets globally. I would probably also want to see if you've given a sensitivity of your target price. Suppose you change, you make your risk-free rate a bit higher or lower, or your terminal growth rate a bit higher or lower. What does that do to your target price? I would also probably want to see a scenario analysis. So, a bull case or a bear case, what your TP and your earnings look like in those scenarios. And so all of these things, put yourself in the mind of a grader. I might want to assign like maybe 5 marks to how the method that you've arrived at. I might want to assign 5 marks to, if you've put in a scenario or sensitivity analysis. All graders will do it differently, but I can tell you that they will break it down, this section down in their head like this. Okay, so have they done this? Have they done this? Has the team done this? Obviously, if you've done it right or wrong, that's of course is important. But at least put these, if you address all of these issues in your valuation one, I can guarantee that you'll get more than 15 marks out of this section. It's a very easy section to get right. But so the example on the left, as you can see, so their assumptions are put in a table. They've given a peer valuation. I'm just giving you some. By the way, this was not a complete. There was no sensitivity in this. There's no scenario. But I can just see that they followed certain things and put it in table form. The one on the right, this is it. Out of 20 points, this was the entire valuation section. And I'm not going to give. It's going to be a low score, right? So I don't know what's happening. I don't know why the terminal growth rate is 6. I don't see where the risk-free rate is, where it's coming from. I don't see what's happening. How you're arriving at these inputs. There's no table, nothing. The valuation section should be full of tables and maybe extracts from your financial model. So the one on the left has some of the elements that I spoke about. The one on the right is falls short, I think, right? So there you go. ESG. This is new. This wasn't there in the past, and I think even our local graders would have just seen this a couple of years. This section wasn't really there in prior years. It's there in the last few years. It's so there's no right or wrong way to do this. On the left is a local report. I think it's a decent example. You can break it down into environment and see what the company has been doing on that aspect, and then break it down into social. But I can some of the things that you want to talk about, I've put up on the slide. So social, you might want to talk about CSR activities or gender equality, or how supportive the employer is to its employees. Environmental, because you are looking at a cement company, you might want to look into coal and water use. These are big issues for the cement industry. In fact, globally, there are some funds that focus a lot on ESG, and for them, investing in cement companies is off limits. So that's maybe think in terms of that becomes very important, especially for a cement company. For governance, you're looking at how experienced is the management? Are there frequent changes on the management? How is the board? Is it equipped to be a good board? All of these things you can look at. Now, the example on the right, on the bottom of the slide, is actually a slide I've actually pulled out from a sub-regional presentation. So this was a winning team from I think it was from China or Hong Kong. And they'd done something that was interesting and fun. They tried to give a score on ESG, and so they've given so you can see the points that they've put in: environmental, social, governance, and they've put on the main points, and they've tried to give a score. You can I thought it was fun. You can think of doing it, but again, maybe something that's easy to understand. Otherwise the reader could be like, what's happening here? I don't get what's happening. So if you don't want to be adventurous, you can do what's there on the left. but at least, understand the essence of ESG. You need to at least write, if the company takes ESG seriously. I tend to find that if companies do take ESG seriously, then they are serious about their business, and that reflects in the long run on how well their company does and how well their share price does. But you need to form an image. I mean, is this company actually true to their word, or are they just paying lip service to ESG? And see if you can, just don't write what the company is saying. Here you'll be relying a lot on what the company is saying we are doing when you go through their report. But also try to get a sense of, look, could they do more? Or do we feel that when we, if you really want to work hard on this, you could compare their governance standards with maybe their ESG standards with some other big cement companies in the space. And you can then say, look, we think that they're weak in the space or they're strong in the space. But that's work, right? But it is 15 marks. So see, there's no right or wrong way to this, but this section, you can either make a mess out of this one, or you can do it really well. So really try to do a good job on this one as well. But I've tried to show you what is the bare minimum you should aim for, which is the one on the left. The one on the right is an interesting, you can think about maybe developing a scorecard or comparing your company with other companies on ESG, and then giving a score. So you can give that a shot. Right, this is the last section. At least in my head, I want to see the risks last. If you want to put them up in the middle, you can do that. But typically, people put the risks, right at the end. So all of your report has gone through, being persuasive about your investment case. But we analysts also want to protect ourselves in case we get things wrong. So the risks are super important in that context. So you want to put out what could go wrong. And I know you probably can't make out, there's a lot of stuff going on in the left-hand side of the page of the slide, but this is an example of I felt it was very well done. So they've talked about different types of risks. So business risks, operational risks, market risks. It goes to the second page as well, which I haven't put up, and there's another more types of risks there. They've also gone ahead and said what could mitigate that risk. So this is a risk, but maybe what the company is doing to offset the risk, or why they think that this risk might not materialize. They have also taken the time to put these risks in a grid. So as you can see, the first risk is B1, the second one is B2, and they've tried to put them in a grid where they're saying, okay, the probability of that risk and the impact of that risk plotted against the impact of the risk. So I thought, and this is something that I've seen in regional reports as well. So it's good practice. And so you compare this with the one on the right. It's the same company, and this was literally their entire risk section. And it's the teams just dropped very easy marks. It's 10 or 15 points. I'm not sure. It's not 5 marks. It's at least 10 marks, this section. And so you compare the effort that has gone into the page on the left-hand side, and you compare the effort that has gone into the right-hand side. There's nothing wrong with the one on the right-hand side, but you can compare the effort that's gone in, and chances are that the one on the left, the grader, is going to give a higher mark to the effort on the left-hand side of your screen compared to the one on the right. So that's essentially it. So the idea was to tell you, while you get into your while you get to writing your equity research report, what are the main elements that your report should incorporate, what good elements look like, or what not so good elements look like. And so hopefully you now will have a sense of the quality of work that needs to that graders will expect. And these are graders that they also volunteer for grading the global competition as well. So they're professionals who are working in the industry. Most of these graders will actually be buy-side guys. I mean, they will be actual clients who, when I write a research report, they go, they're my audience. So they're used to a certain standard. They know what a good equity research report looks like. So I hope you won't be disappointing them. So that's it as far as the presentation is concerned. If there are questions, I'm happy to take them. So I'll just wait a minute or so, for people to put in questions, and you can take it from there. I do see a couple, but I'm going to wait for more to pop up, hopefully. Okay, so I'm going to the first question. Is there any good recommended book on equity research report writing? There must be some out there. I haven't. I mean, I actually went. Obviously, we used to read the reports that maybe senior analysts had put out when we were younger, and used to see what good international reports look like. So I haven't come across any book as such, but I am sure that there will be some out there. I will see if I can find them and maybe share with Hurena and the staff, and they can maybe tell you. But I haven't come across. But I'm sure there must be. Secondly, the other question is, aren't investment banks also buy side? No, investment banks are actually sell side because they're helping the clients, right? So they're working on deals. The buy side is the one that's actually putting their money, right? The investment bank will be helping to get them to decide where to put the money and helping them to execute that deal. So investment banks are, investment banking, brokerage are part of, the same sort of firm, and investing firms are different. So don't be confused by the word investment. They're helping, so they are sell side. I think at this moment, I think these are the only two questions that I see. If we can wait a couple more minutes for more questions to show up, and I'm happy to answer them.
Raza, there's another question. Is there any guideline or standard for writing ERR?
The equity research report? No, I mean, see, that was the idea. What I wanted to do in this section was so bring up that scorecard for you. And so, like I said, there's no one way to write an equity research report. But in your case, this is they've made your life easier, and they've said these are the sections that you're expected to put in. So an equity research report will have all of these sections. Obviously, we don't headline our actual professional reports as financial analysis. It's not, but yes, we will have a valuation section, and we will maybe put the investment summary in a box too, so that it's more prominent. The comparative positioning, there won't be like a separate heading for it professionally, but it's going to be there in there somewhere. But yes, this is something that in the exercise and the competition that we are in, the scorecard is actually setting out that template for you. And like I mentioned during the presentation, you can actually change the order of this as well, to whatever you think works better for you. Should the first page of the company be the company profile? No, ideally no. Your investment, I mean, you should, it might read like, we issue a buy call or sell call on Maple Leaf Cement, the third largest cement company in Pakistan, based on our target price. So you've got a bit of that company profile in there in that sentence, but you need to say, based on our target price of this, which is derived by this. That needs to be the first page. The company profile can probably follow as a second page, I feel. That it probably makes sense to describe that company description. Probably makes for a decent second page. But again, don't start with this. Don't start. If you want to put this up in the first page, put it up by all means. But you want to start with what you want the reader to do. Remember, it's a marketing material. You're not the company's representative. You don't work for Maple Leaf. You work for a stockbroker whose task is to convince your client to buy or sell Maple Leaf, because that is how you make money as a brokerage firm. So you are saying, we recommend this. We want you to do this, and here are our reasons why. The company profile is important. Of course, you can see there are 5 marks assigned to it, but you need to maybe look at it on the second page. That's probably what I would do. Do we need to estimate future value of the company? Yes, that is the entire point of this exercise, this whole competition. So basically, you need to be giving a target price, right? And how you need to be arriving at that target price. So if the share price of Maple Leaf Cement is 27, and you come up with a target price that is more than 27, the chances are that you will be issuing a buy call. If you come up with a valuation of the company that is below the current market price or the market price when you're writing that report, then chances are you'll be issuing a sell. But how do you come out with that target price? So you will be, estimating the future value of that company. So you will be discounting the future cash flows, essentially, right? And so your model, you will have projections. You will be making assumptions, and the output will be the future earnings per share, the future profits, the future ROE, the future cash flows, and you will discount those cash flows, make them, what will be the present value of those cash flows, and that will be your target price. So naturally, you need to be estimating, what or getting a vision of what the future looks like. Difference between enterprise value and equity value. Enterprise value would be, I think, looking at the firm holistically. The equity value would just be I think the difference with FCFF, FCFE wala aa jayega. But you make certain adjustments to it. Sometimes this peer valuation nahi ho pati in terms of price to earnings, because the company might be in a loss, so then you rely on other things. In this case, you would be relying on enterprise value. That's a very commonly used thing to value cements, EV per ton. So uska formula aap dekh lega, how to derive EV. I suggest, obviously, looking at sector specific valuation techniques. EV per ton, EV per EBITDA for cements are fairly common. So you can look into that. Right. This is a question sample available for equity research report. I think Kurena might have shared sample. I'm not sure, but if you go on the CFA Institute's website, then and you go to the research challenge, you can probably pull out. I'm not sure, but I think they are available, the previous year's winning reports. But I'm not too sure about this. I have used samples, excerpts and pictures of actual reports that were submitted in prior years. I'm not sure if they're available to be shared with you guys. And but obviously, I think the global winning reports are on CFA Institute's website, if I'm not mistaken. So you can go to the website and check it out. Turena, is that correct? Are there examples of the winning reports? Are the winning reports?
Yeah, the winning reports are there on CFA Institute's website. I will just share a link here in the chat box.
How do you do comparable companies analysis? So look, I mean, so I'm not sure what you're trying to ask. It could be how you're comparing their performance, financial performance, their positioning. So obviously you want to look at their main ratios. Maybe you want to see their sales, the price that they're getting, how large they are. If that's the analysis you want to do at that level. And on the valuation side, you want to maybe compare their valuation multiples with the other peers, right? So you want to be looking at the price to earnings, price to sale, price to book, EV per ton, EV per EBITDA, and then you can form a grid and say, okay, oh look, this is the cheapest within its peer group. And that could be a very powerful sort of point, because either it will be cheap for a reason, and that discount will be justified, or you will argue that, oh no, look, this discount to peer valuation is not justified, and that could be a strong basis if you want to issue a buy call. That here is why I think that discount is not justified. So comparables can be done within financial analysis, or it can be done on the valuation side. And I think Urena has just put up the reports of the past winners. So there you go. So there you have examples, actual reports that have not just won their local round, but actually at the global level, right? So these will be stellar. So good examples of, the level that you're expected to have at the international stage, hopefully when you progress there. Was use of sensitivity analysis in equity research. Look, it's important because I want to see how things can progress, right? So for example, terminal growth rate, I want to see what you've taken. If you increase it or decrease it a little bit, does it have a massive, impact on your target price? I want to see the risk-free rate, and maybe I expect, if you are tracking the current interest rate environment as your risk-free rate, it might be worth considering how interest rates are going to behave going forward, and so that could potentially lead to a reduction in the risk-free rate going forward. And so I might want to see how the target price will evolve in that situation. So that gives me a good sense of maybe a bull case target price, depending on your valuation inputs, and a bear case target price. So I will know how much I could potentially lose if things go wrong. And so it's a good sense of, maybe putting a, you have a base case target price, but then you can also have, maybe the upper limit or the lower limit. So that sensitivity will help show me the risk reward that is in play. How much is there potentially to lose and how much is there potentially to gain? And that will help me in firming up my decision. I think at this point in time, I only see these questions. So Rena, maybe in the interest of time, since we're an hour past the start mark already, and maybe students want to go see the football match, the World Cup's on, so maybe we could consider giving this a close.
Sure. Thank you so much, Raza, for giving us so much time from your busy schedule. I think we can close the session now.
Excellent. Thank you very much.
Thank you. Thanks. Bye.